Okay, we're continuing with our introduction to macroeconomics. Last lesson we looked at GDP, or gross domestic product, and that being the total value of goods and services produced by an economy in a given time period. Well, economic growth, well, that's simply comparing GDP from one year to the next. So we're going to look at, you would think economic growth would be a good thing, but as we'll look at in this lesson, economic growth has many benefits, but it also has some cost to an economy and society as well. Okay, so an economy is said to be experiencing economic growth when its level of real gross domestic product, real GDP, experience. Now remember the differences between nominal GDP and real GDP. Nominal GDP is just a straight figure, but real GDP, we are allowing for inflation. So we're taking the measurement of inflation out so that we can get a much truer real figure of just how much the economy has grown as far as production levels go. Economies need to grow though to generate enough new jobs for new entrants into the workforce. Well, automatically when you talk about new entrants into the workforce, most people start thinking about immigration and immigrants coming in and all the boat people and the visa 457s. But you've also got to look at yourselves. I mean, you're year 12, you're watching this, you're going to do your VCE. Even if you have the intention of going to university next year, you're still probably going to get some sort of part-time job. So you're going to make, you're going to want to go in and find a job somewhere. So you're hoping the economy does keep growing, so it makes your opportunities to get a job much better. Okay, so ideally the rate grows. It should be faster than the rate of population growth. Now later on in the year, you'll start talking about population, or in this output, all that sort of thing. Okay, if economic growth rises faster than population growth, there will be more goods and services per head, and more constantly the nation's standard of living will rise. So if we've got the growth is outstripping population, well, that means you've got a greater choice of goods and services as a population. Therefore, if you don't like one particular TV, you can go for another one, a more expensive one, and hopefully your standard of living will rise. Positive growth is good. It also needs to be sustainable. Now, sustainability has become a bit of a buzzword in the last, say, 3 or 4 years. Going back to when we used to ride our dinosaurs to work in the 80s, my era, and everything was in black and white. Colour hadn't been invented yet. All we cared about was making our next dollar, and we didn't really care about making the next dollar next week. We wanted to make the dollars today. So with the advent late of financial crises coming into the 80s and also the global financial crisis in the 2000s, sustainability has become very important. Okay, so we need to make sure that we don't impose costs on the community to result in future generations not being able to have as good a standard of living as the current generation. If you go back to your area study 1, aren't we talking about temporal efficiency here? Making sure that today's needs are also satisfied, not at the expense of tomorrow's needs. We're still satisfying tomorrow's needs as well. See, everything starts to tie in. Okay, so standard of living become very important in Unit 3, Unit 4, Year 12 economics. We talk about standard of living quite a lot. When economists talk about a nation's standard of living, they're referring to 2 components. Material living standards. This is what we measure. Equal to the value of a nation's real GDP divided by its population. So we're looking at a per capita figure here. A rise in real GDP per head of population means that material living standards have risen. Material, cars, houses, TVs, all that sort of thing. Material, real, can be measured with a dollar value. Okay, and the second part is non-material living standards. Health, safety, environment, people's level of happiness, urban congestion. So now we're starting to talk about those things that are a bit more altruistic, an internal feeling. They are hard to measure and are viewed very much as subjective. What satisfies one person's non-material living standards may not satisfy somebody else's. One person may be happy with their clapped out old Toyota Camry from 1997, whereas other people like to upgrade their car year by year because it makes them feel better. So you can see the tie-in here between material living standards and non-material. A lot of people attach their non-material living standards feelings to their material living standards. If I've got the best stuff, I feel better about myself. There are plenty others that are quite happy, couldn't care about material living standards. If they can wake up in the morning and step out of their tent and fish, they're happy. So it becomes very subjective. Economic growth is the means of helping the nation improve both of these aspects. If we have economic growth, everybody's happy. Your material stuff, your non-material, you just feel a lot better. Higher growth rates will increase the community's access to goods and services. This is the material. We've got greater goods and services, so our material living standards are going up. And as I said before, if our material living standards are going up, we as a society tend to feel a lot better, a lot more comfortable, happy to go to work, happy to go out, happy to wake up in the morning. That is our non-material living standards increasing. Okay, so let's look at the benefits of economic growth. Many benefits for a nation experiencing economic growth. High rates of economic growth mean that levels of production are increasing. If levels of production are increasing, businesses clearly need more workers. They want to grow, they want to produce more, they'll need more labour. If they need more labour, they're going to hire people, unemployment tends to drop. More people are out there working, more people earning a wage, which is higher than the unemployment benefit. Therefore, they can then go out, they feel better about themselves because they're out working, and now because they're earning more money, they can go out and buy higher class material products. Again, increasing their material living standards, and because they're doing that, they're also increasing their non-material. A further benefit of growing economy, lower unemployment, is that incomes will rise. That's exactly what we just said then. Income's going up, higher, earning more money than you are on the dole. Growing economy can help to improve a nation's international trading position. If we are still producing heaps and heaps and heaps of goods, then rather than sell them internally, we can look at selling them externally. That improves our terms of trade, which again you'll talk about later, predominantly in Unit 4. As more production takes place in areas such as mining and ag, export markets can be developed which will bring money and new investment into the country. And we found that with the mining boom that we've had lately. Not only are Australian companies doing well, but there's plenty of overseas companies who have invested in the mining industry in Australia. So now we get on to a bit of a funny area, costs of economic growth. You may think economic growth is a good thing. How can there be costs? Well, growth can have negative effects. If growth is too fast, shortages can occur and inflation will take place. So going back to our Unit 1 stuff and stuff that we looked at the beginning of Unit 3 introduction, a shortage of, say, a product in the market means that demand is high, supply is low. So we have a shortage. If demand is high for a product and supply is low, then generally the price will rise. Okay, remembering our supply and demand graphs, just think about how shortages occur. The price tends to set below equilibrium. It'll be moving upwards. It will keep moving up and up and up. This causes, if prices keep going up, well, naturally we know that's going to be inflation, which is one of the things we're going to talk about in one or two more videos. The disadvantage is whose incomes do not rise at the same as inflation. So if inflation is going up by 3%, and recently we've had the dispute with the teachers, and it is still ongoing, whereby the government wants to raise people's salaries by 2.5%. That sounds fine, but if inflation's going up by 3%, so your wage isn't, either your wage is only going up by 2.5%, or your wage is not going up at all, but prices still keep going up, that makes it hurt. That gives you less buying power, and that also goes back to, remember what we talked about in Area Study 1, the income effect. So prices have gone up, but our income hasn't, so therefore we must spend a greater percentage of our income. Okay, one of the main effects of economic growth is in the area of externalities. Remember our positive and negative externalities? An externality is an effect on the third party, not directly involved in the production process. And usually the main one we talk about is pollution with cars and things like that. However, externalities, again, remember, can be positive or negative. For example, the Gold Coast is holding the Commonwealth Games in 2018. Well, they're going to be building many new sports venues. They are going to have lots of infrastructure spending. They will upgrade their public transport systems. There's just going to be a lot of infrastructure spending on the Gold Coast. Well, that's a positive externality for those people who are living on the Gold Coast. They're having their transport upgraded, not because they need it for their day-to-day living, but they need it because of the Commonwealth Games and the influx of people that's going to come in. Well, that once the Commonwealth Games is over, that is then going to flow on into the community. However, a negative externality could be that many parklands and things like that can be destroyed in order to make way for the new venues. There's going to be lots of new sporting venues. So we may have land, we may have some areas where animals have to be moved on, that have to be destroyed in order to house not just the sporting venues, but areas for the athletes to live while they're here for the Commonwealth Games, all that sort of thing. So be aware that some things are occurring and they can be positive externalities and negative externalities. Okay, that's the costs and benefits of economic growth. Make sure you're aware of the both, because it's usually a reasonably good VCE question. Okie dokie, done.